Okay, welcome back to part two of a series on finding growth stocks. Now, last time we left off, we were going to investigate the financial statements of Intuit after seeing the technical breakout in the early 2010 timeframe. So, before we actually get into that, I want to take a look. So, let's take a look at a chart of the fundamentals. We can see this early 2010 timeframe, the earnings, which is this blue line, broke out to a new high right there. We can see a 2016 correction, and then again a breakout to a new high on the blue line. So it's good that we've got increased earnings that coincide with the breakouts in new price in the stock. So now I'm looking at this pink line, which is the annual growth. And you can see here it's at least flat. It takes a little bit of an up move here, and then at least stays pretty consistently flat all throughout 2016 into the late 2017, 18, 19s. So that means that its net income is actually compounding, which is good. All right, let's start with the 2010 annual report. And what we're looking for is selected financial data on page 31. So let's start with the consolidated statement of operations. We can see that the net income is going up, 574 being the latest annual income. Income per share down here, that's what we really want to look at. Just kind of look at it starting from the right-hand column at $1.20. Look how it steadily goes up to 182, and then just to check what they're doing with share buybacks and compensation, the diluted income per share, same story. It's a little bit less for dilution, but it goes up from $1.16 in the right-hand column over to $1.77 in the left-hand column. So that's what we're looking for. So now let's check out what 2011 has. What we want is, let's see if here's a clickable link. Nope. So we want page 30. And I went past it. Here it is. Okay. Now, market information for common stock. All right, shares. Okay, revenues, income, net income. Again, annuals for 2011, the annual is up to 634 million. Trend is continuing higher. Let's just check out. Yep, $2 is diluted income. That's great. Keeps going up in the right direction. So now let's get 2012. Now, what do we got here? We're looking for selected financial data, page 31. Okay. Oops. Page 31. Oh, all right, that's 37. Here we go. 34. And here. Balance sheet. Here we go. Income, net income from 634 to 792. That's a large increase, okay? That's significant. 260 from 2. So it looks like they're having a little bit of accelerated growth. Normally the growth would taper off, but the less than 30 cents from 177 to $2 now transitions into an increase, 60 cents on a higher base of 2. So that's good. Let's go now to 20. What are we on? 13. Let's see. Selected financial data is on 30. My goodness. Okay. Here we go. And again, we get another increase, 260 to 283 diluted net income per share. So everything is going in the right direction. And now, what was that? We want, 14 now? Okay. 2014 is selected financial data again on page 30, 40, 38, 37, way off. Here we go. And so that'll be financial condition, income. Again, a big increase here, 283 to 312. So you see consecutively, year after year after year now, since 2010, they've been having earnings increase. That's what we want to see in these growth stocks. So a lot of the time you'll see stocks that have those kind of breakouts, just like Intuit did, but the earnings just aren't there. And these are GAAP earnings that are going up. So for these to be going up like that is really good. Of course, you want to verify. What page are we looking for here is 29. So, okay, 32. Here we go. And what is the problem here? Oh, wow, look at that. So they started declaring a dividend several years ago in 2012. And the dividend's been increasing too, up to $1 now. That's significant, but look what happens. The income goes way down. Okay, from 3, and it looks like, was there an adjustment there? No. 128, it goes way down. So 2016 or 2015, this was a big problem, 2015. All right, they had a problem there. And if you recall from the chart, there's a dip down in that price for the whole year. So we had all that going on. But let's go and see what happens. Do they recover in 2016, or is this a multi-year problem? Where's selected financial data? Where is it? Sorry, 28. Okay. 2016, let's see, net income is way up, and especially up from 2014. 2016 was 979 million net income from 2014 of 907, which was the highest. So a new high in net income. Does it translate down into earnings per share? Yep, new all-time high earnings per share and 20-cent increase in the dividend. I mean, this is just an amazing results. These are just amazing results from a corporation. So this is what I mean. So this is a perfect example. It's looking more and more with every year that goes by like a perfect template. And I don't think you're going to get one that looks exactly like this, but now you know. 26, is this a clickable link? It is. Huh. So there we go. Everything's getting better. That's dividends. Well, it didn't take me to where I wanted to. Purchase of equity. Yeah, here, yeah, no, it did. Okay, okay, net income goes down here, look at that, but earnings go slightly up. Look at that. So it looks like they're doing some share buybacks. So now this isn't ideal. 2017, it's not ideal when net income goes down, but earnings per share go up. Okay, kind of indicative of a slowing growth phase, which makes sense because the dividend started in 2012. So, once a company starts a dividend, it's probably getting maturing phase, in the maturing phase. So this goes along with that. That now earnings probably peaking out. It's getting very mature in the late maturation cycle, and it's now having to buy back shares. While and to get the earnings per share to continue going up. But look at the dividend increase, $1.36. I mean, it's still good, but now we're not. Now we got to make the recognition that once these kind of things happen, and it'll be difficult to tell the difference between a slowing in earnings and a one-year dip like it was in 2016. So those things can happen. in the earnings. So that's why we kind of use the charts, because that price breakout back in 2016 was leading the earnings. It was showing that perhaps it was just a 1 year stumble and you could get a few more years of growth out of it. And let's see, 2016. No, I mean that 2015 where 2015 where it did $1.28 was the 1 year stumble. So this is what I kind of look for in a stock. Let's see now what happens with as we go into later and later. If those earnings continue that kind of EPS goes up while net income goes down phenomenon. Selected data on 29. Okay. Let's see. Oh, wow. No. Yeah, well, net income per share went up to $4.64. And net income way, way up. Wow. Over $1 billion of net income. GAAP net income. So there you go. Maturation, whether it's matured or not, whether the business has matured, it seems irrelevant. The earnings are just unreal. So what now? I mean, let's see, where do we get into trouble? All good things must come to an end. Oh no. Let's see what that's about. Okay. Where index, forward-looking statements. Where's so we went back to non-clickable links. That's great. 28, page 28. Okay. Here we go. Okay. So now let's see what happened. Net income up way to 1.5 billion, almost 1.6 billion. Earnings per share jumped up almost to $6. Again, a dividend increase to $1.88. So nothing is slowing down on this stock. This is, I assume that they're doing a lot of it by debt and everything else. We got to go see the breakdown of the capital structure to see how they're earning this net income. But this is so rare, I don't even really care that much because you never see stocks like this with this kind of earnings data outside of, the Apples and Amazons. Here we are the next year, net income per share, huge increase again. Massive increase in net income. Actually, I wouldn't call that massive, is a mistake. Probably not accurate, but it is an increase. So you see, it is slowing down. Here's the law of large numbers, not that the business is slowing down, that it's getting mature, rather. Again, increase in dividends. You so rarely see this. If you get anything that looks like this, I would say it's a great candidate. This is just the perfect candidate for a growth template. Because you won't see this even in much smaller companies. Oh, where is the... Oh, sorry. Here. Okay. I thought... Okay, just let's start over. Where is the selected financial data? Okay. No, yeah, this is a bunch of nonsense. Look, they changed the format of the annual report. Look at this. I just wanted to see the net income. What is all this? Net revenue? It's all nonsense. All right, and this is what I guess generally happens. Either I did something wrong or they got some new person in there that decided this was a better way to present the information. And I can't see anything, so I'm done with it. But that, at least as a historical example, from 2016, from 2015 and on to now was a growth phase. 2015 was a bad year. Before that, the real breakout happened in 2010 and 2019. So that's really what we want to keep looking for, is stocks just like that. All right, so hopefully this video helps on how we can kind of identify these growth stocks at the breakout that also have some sort of earnings momentum, because what we're looking for is this price appreciation all the way up from $30 to $610, because those are the stocks that I feel like I can really work with, ones that I don't have to trade every day, but that they're breaking out in price, and they're breaking out for a reason, which is earnings growth. That is a result of a product or a service they provide to society that society needs and sees as a benefit, a value, and that translates into earnings growth. So hopefully this helps on how to identify that. We can use this as a template on what to look for in the future. All right, well, that wraps this up, and thanks for watching.